Flutter Entertainment Group, ticker FLUT, just reported earnings and things are looking very, very good. They were up 1.44% today, up 1.55% here in the after hours. So the market definitely liking their earnings. We are going to talk about it. Flutter Entertainment are the world leader in online sports betting and iGaming. And for those of you that don't know, I'm a holder of Evolution Gaming. So this is a direct read-through into what they will be doing. Today, we're going to go through the earnings. We're going to talk about the good, the bad, the ugly. Did they miss or did they beat? We're going to talk about the earnings overall, go through everything in granular fashion to see if what they said makes sense and is the company still growing. We're going to look at some of the positives and negatives as well as Q&A highlights from their earnings reports. And we're going to dive into every single thing. They have this fantastic spreadsheet right here. They have quite a number of individual businesses under this one brand. We're going to look at their results and also what it means for the global total addressable market. They had quite a number of tidbits here, and it does look like we are going to see growth as a whole. But just how much growth, that's what we're going to discuss today. And then finally, we're going to look at where do I peg fair value for the stock or Flutter Entertainment. And we're also going to look at the chart. Technically, is it overvalued? Should we be buying the stock right now? So let's dive in. Flutter Entertainment up 26% over the last year, so about equaling what the S&P 500 has done. Definitely not a cheap stock. You can see it trading at a 27 forward PE, but with how the company is growing, you would expect a slightly higher PE ratio on this name. So let's actually go ahead. Flutter Entertainment actually beat EPS by $1.11. Now they reported $2.94, so it was a very, very big beat here. That was on the back of missing revenue by $50 million. However, the stock was still up here. You could see it up 1.55% in after hours, 1.44% today. So you're looking at probably a total earnings move of about 3% on the back of these earnings. Now let's actually go ahead and read through the earnings. We had some very interesting stuff. So they actually put out this highlight sheet. This is really, really awesome of them to do. So group revenue came in at $3.8 billion for the quarter. They grew 14% year over year. US revenue grew 14% year over year. It's $1.6 billion. So almost half of their total revenue is US revenue. This company is absolutely huge. They have 26% iGaming share in the US, 14.5%, and then 49% of US OSB NGR share. OSB or online sportsbook market share is the net gaming revenue market share for our FanDuel brand for the 3-month prior. So FanDuel itself in the US has 49% market share of the online sportsbook. So this is not just a big brand. This is the market leader in sports betting as well as iGaming industry, a huge partner for Evolution Gaming. So let's actually go into the earnings. And you can see that average monthly players, AMP, this is a KPI they track, in 2024 came in 14.6 million. This was growth of 7% year over year. So ultimately, this is what's going to drive the entire growth of the group. Revenue at 3.792, so pretty much 3.8 million. That was 14% growth year over year. And for the full year, we actually saw a 19% growth through December 31st. And then AMP, average monthly players, was 13% growth for the full year. So this is actually just a quarterly growth right here. Very, very interesting. But yeah, 14 million players, absolutely insane in comparison to what the actual total addressable market is. So they had net income for the quarter of 156 million. This is actually up significantly from a loss last year. And officially for the full year, 162 million. So this is a company that's just becoming profitable after probably years and years of investment and growth. So the net income margin, 4.1% and 1.2%, but do expect margins to expand significantly over the next couple of years, especially as this company becomes profitable and a cash machine. Adjusted EBITDA for the quarter was up 4%, but up 26% for the full year from $1.8 billion to $2.357 billion. The adjusted EBITDA margin was 16.8% and 17.3% for the quarter. Earnings per share for the quarter came in at 45 cents. Adjusted earnings per share at $2.94. For the full year, it was $7.27 and 24 cents. And again, we're looking at growth in earnings per share for the full year and for the quarter of over 100%. I don't know how they calculate that since it's a loss, and then 64% and 67% for the full year and the quarter. So just absolutely insane results as this company turns profitable. Now, free cash flow was $473 million for the quarter. So still a free cash flow positive company, 175% growth from last year, and then 181% growth in free cash flow to $941 million. And this is officially a cash cow. We can see a bit of a higher leverage ratio, but again, from a company that had spent almost decades and decades in investment, you would expect, you want the company to take on debt for that investment, and you should see this leverage ratio decrease. And that's actually exactly what you saw here for Flutter, going from 3.1 times to 2.2 times. There's two ways to decrease your leverage ratio. You could actually pay down debt or increase your income, and increasing the income is exactly what this company did to decrease their leverage ratio. So they're in a much healthier position now in 2024 or 2025 than what they were in 2023. Now let's go ahead and actually look at full year 2025 guidance, because ultimately this is a read-through for what's to come. Now 2025 started well. In the US, handle growth stepped up from Q4 levels. Overall underlying trends in line with our expectations. Sports results have been broadly neutral year to date, with a positive outcome on Super Bowl, offset by a customer-friendly sports result in January. Performance outside the US reflects strong Q4 customer base carried into Q1. Full-year guidance introduced below represents year-over-year growth at the midpoint of 13% revenue and 34% adjusted EBITDA. So 13% being the midpoint, so I'm assuming they're looking at 12 to 14% growth, and then adjusted EBITDA of 33 to 35%. US existing state growth is expected to be in line with Investor Day commentary. We'll look at the Investor Day commentary. This growth is from a larger underlying business in 2024 than originally outlined in our Investor Day, driven by greater than anticipated growth subsequent to that event. Existing state revenue and adjusted EBITDA expected midpoints of $7.2 billion and $1.4 billion, representing year-over-year growth of 33 and 176% respectively. Okay, so they're looking at EBITDA continue to look very, very impressive as they continue to become profitable, as they go from net income losses to net income profits and just become a cash generating machine. You know, once you have all of the investment going, the incremental cost per customer once they're on your platform is very, very small. The big part here is just customer acquisition costs, getting them on your profile, getting the KYC costs down, your customer costs. Now, looking at guidance excluding the US, revenue and adjusted EBITDA expected midpoints of $8.25 billion and $1.85 billion, which are in line with 2024 and represent growth of 6 and 10% respectively after adjusting for foreign currency headwinds at current spot rates. And the gross sports result benefit of 2024 guidance excludes NSX and Sinai acquisitions, which are on track for completion in Q2 2025. So there could actually be a little bit of upside for guidance, assuming these acquisitions go smoothly and they are accretive. So there could be a little bit of upside here, but I think for the most part, from Q3, Q4, you should see these contribute substantially. So there's a lot of growth for this company. Now, in this pitch deck that they released right here, they actually gave an outline of where they think the market's going to go and just their overall brand. So let's go ahead and look at it. So Flutter Entertainment, our brands are leaders across the globe with a sizable market opportunity. They see $368 billion global market opportunity by 2030. Now, this includes the global online sports betting as well as iGaming market. Okay, so this is the two markets combined, $368 billion by 2030. And if we actually go to their Investor Day presentation, right, they actually see a compound annual growth for this figure at about 8%. So they see the current opportunity at about $244 billion. That's what they expect by 2030. So just 5 years from now, and they're looking at 8% growth for both sports betting as well as iGaming. The majority of the growth, when adjusted to 100, will actually come from the iGaming market. We're seeing immense growth, and only 7 states have iGaming legalized. But they actually mention quite a number of things with regards to the total addressable market here. So they see significant 2030 regulated TAM growth, right? So they see a $368 billion market opportunity. They go ahead and outline their 2027 guidance. They're looking at a 3-year compounded annual growth rate of 14%. So they're looking to continue to take market share. Remember, they currently have 26% market share in the iGaming segment. FanDuel has 49% in total. I would say, Flutter Entertainment Group probably has close to 30% market share in the US, up there with like DraftKings and Stake. They do have a number of brands. Don't forget, it's FanDuel, Betfair, Sportsbet is a part of their brands. I saw PokerStars, Jumbly Games, MaxBet. These are very, very big brands. They say the US market is expected to be 70 billion. So the lion's share, close to 20% of this, is actually going to be just the US alone. And we also have North America. We also have South America. We also have Australia. You can see these are their biggest geographies. Their 15 largest geographies. So, most of Europe right here. That's what you want to see. India, very, very interesting, guys. They still have a lot of expansion into China if they want to. Southeast Asia. They're in the Australia already, North America, Canada, and I believe this is Brazil as well. So they do have room to expand here in Africa, most of the Middle East as well. Mexico too, they could expand into that. So, they have a long runway of growth here for Flutter Entertainment. But that's all good and well. Let's go ahead and look at the earnings call. Let's look at some of the positive points in the earnings call. Now, Flutter Entertainment reported strong financial results. Again, we went over this. A 19% revenue growth for 2024, and a 26% increase in adjusted EBITDA. The company solidified its leadership position in the US market, achieving a 43% market share in sports betting and 26% in iGaming. Like I said, you're probably looking at about a 30% market share in total. Successful expansion into new markets, including North Carolina and Vermont, and the addition of MaxBet in the international business. Flutter Entertainment is on track to achieve its 2027 goals with a focus on strategic growth and cost efficiency programs expected to deliver $300 million in annualized cost savings by 2027. And if you look at $300 million in annualized cost savings on something like EBITDA of $3.3 billion, that is tangible. That is extremely accretive to the bottom line for you as a shareholder. Looking at some of the negatives, the company faced adverse sports results in the US, particularly in the NFL, and they still produced stellar results, which impacted revenue and adjusted EBITDA by approximately $550 million and $360 million respectively in Q4. There is a potential risk of increased state gaming taxes. That is something Evolution is dealing with as well. The racing market in Australia showed softness. The Italian market saw some share loss in the second half, and the competitive environment in Brazil is challenging with up to 200 companies applying for licenses. In a service like this, where it is somewhat commoditized, the customer will literally go to the cheapest option. And so this immense amount of competition is not that great for Flutter. And that is why it's better to deal with something like Evolution Gaming, which is a B2B operator, right? There's not 200 competitors in a single geography. There's only like 40 competitors worldwide. And that is why, owning the supply side of sports betting and iGaming versus the consumer side is significantly better in my case. With all of that done and dusted, great earnings, guidance came in line. Are the shares undervalued? Are they overvalued? So I've gone ahead and modeled what I expect the return for Flutter Entertainment to be. Now, looking at $14 billion in revenue for 2024, and then looking at 20% growth next year, 14% in 2026, 9% in 2027, and then 8% in 2028-29. I do see margins expanding, especially as they continue to costs, looking at 15% margins, and I do think these can actually go higher. We have seen the group report quarterly margins of very close to 28% in some quarters, so that could be a possibility. These could be light end margins, but I've just modeled sequential margin growth of 1% every single year. Looking at free cash flow in 2029 of $3.6 billion, right? Then applying a 20 EV to free cash flow, you get an enterprise value of 73 billion. So you take this figure, multiply it by 20, and then you get the enterprise value. Then you subtract the net debt. So the company actually has, the company has more debt than it does cash. If we actually go ahead and look at its balance sheet, go here to the statistics, and then we scroll all the way down, you can see $7 billion in total debt, $3 billion in total cash. So they are in a healthy position from a cash to debt basis, and they are growing very, very strongly, and their gearing ratio has actually decreased significantly. This is what you love to see. I think this company is at no risk of solvency, especially with the growth in these markets expected, right? So we apply that minus the debt, we get the equity value. And then I've actually gone ahead and modeled out share growth of negative 0.5% every single year. And this is because the company also just announced a second tranche of share repurchases of up to $300 million And this brings the total authorization of share buybacks up to $5 billion. So they could buy back about 10% of the company at current market valuations. So modeling that out, so this number could be increased, but they're being very conservative with their share buybacks right now. So we're going to use half a percentage point. We always want to be conservative, but not overly draconian in our valuation, guys. So doing that, you get a 2029 share price of about $400 per share. That's the current stock price, around about $270. They don't have a dividend yield. And so you're looking at a compound annual growth rate of about 8%. Now, this does include significant multiple contraction from 35 to 20. And if we actually just see, again, multiple contraction to the 25 times EV to free cash flow, you're looking at mid-teens double-digit growth right there. And if the multiple is to stay exactly the same at 35 times EV to free cash flow, you're looking at 21 times earnings growth, assuming these numbers get hit for Flutter. But I prefer to use the market multiple, and the market's multiple of EV to free cash flow, at least for the S&P 500, is 20. It's closer to 21. So, at 21 times, you're looking at about 8 to 9% growth. So is it attractive? Not really. I think the S&P 500 might outperform this stock, but that really depends on what multiple the market decides to ascribe and how much shares they buy back. And if margins can expand significantly beyond 15%, if we look at the absolute bull case of margins, let's say 25%, you would then see, even at an EV to free cash flow of 21 times, the stock looking extremely cheap by that regard. Nonetheless, right now, I don't think Flutter Entertainment Group is that attractive. However, but let's look at the stock technically. So this is Flutter Entertainment Group. So looking at the last year, you can see on a percentage return basis, the stock's up about 23%, maybe a little bit higher here in the after hours. It's had a very good run. As you can see, we've been sort of consolidating gains right here. Then it had a very, very solid run up. And now what it's done over the last couple of months, since about November last year, is pretty much trade sideways. We've made highs right here. And is that an all-time high? Let's have a look. That is an all-time high recently made for Flutter Entertainment. So look, the stock trading at all-time highs, it's pulled back. I mean, ultimately, if the stock got to like the 230 level, this would be the 200-day moving average. It'll probably be closer to here, maybe 240. That might be a great opportunity to go in. However, guys, this is something very, very interesting. This is my global M2 money supply indicator. And look at how interesting this is. Flutter Entertainment has tracked the money supply very, very closely. We have seen a little bit of a decoupling right here. But when the money supply increased, so too did FanDuel, and it actually decreased right here. So we could be forming a bottoming process over the next couple of weeks. And then at or around, I would say late March, let's actually have a look right here. Yeah, middle to late March, right? We could actually put a low and see a rally in for Flutter Entertainment, potentially taking out the highs we previously saw up here. So don't be surprised if we see a little bit of a momentum rise. So this indicator I use is the global M2 money supply, and I've offset it by 45 days. You guys can actually go ahead and find this indicator free for you guys to go ahead and use. So that's very, very interesting. Nonetheless, these earnings should support the continued consolidation that we are seeing here. And I think what the market's really going to do is continue to churn, continue to trade sideways in a very wide range for Flutter. And then in the next earnings, we'll make the next move to the upside or downside. Just remember that the stock and the market as a whole is also seeing some significant deterioration. If you guys want to catch where I believe the market as a whole is going to go, the S&P 500 and the NASDAQ 100, go ahead and check out my main channel, FinFluential Television. But guys, I hope this was incredibly useful. If you like this video, please subscribe, hit that notification bell, and leave a comment for the algorithm. Cheers.